Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden within company filings. Today, we're diving into Illumina Incorporated's latest report, and let's just say they've been busy securing some serious funds. Prepare yourselves for a story of strategic financial moves and big plans. Before we jump in, if you enjoy getting the real story behind company financials, make sure you are subscribed. And for those who want to connect with fellow enthusiasts and get even more insights, we have a fantastic Discord community linked in the description below. Alright, so what we have here is a current report filed on the 25th of November 2025. This isn't your everyday update, this is an 8K, which means something pretty significant has happened. And in this case, it is all about money. So the big news is that Illumina, a company known for its groundbreaking work in genetic sequencing technology, has just completed a massive public offering. They've raised a staggering $500 million by issuing new notes. Think of it like borrowing money from a lot of people at once, but in a very formal, documented way. Now, what are they going to do with all this cash? This is where it gets strategic. A good chunk of this money is earmarked for general corporate purposes. That can mean a lot of things, but what is really interesting is their plan to pay back about $500 million of their existing debt that is due very soon, in December of 2025. This is smart. They're essentially refinancing their debt, likely at a better interest rate, which saves them money in the long run. But that is not all. They're also using some of these funds to complete the planned acquisition of SomaLogic Incorporated. For those who don't know, SomaLogic is another player in the life sciences space, focusing on protein analysis. This move suggests Illumina is looking to expand its capabilities or market reach. Acquisitions like this are a big deal. They signal a company's growth ambitions and confidence in its future. These new notes, the ones that brought in the $500 million, have a specific interest rate of 4.750% and are set to mature in December of 2030. This is a bit more favorable than the debt they're paying off, which had a higher interest rate. This whole move is a textbook example of financial management aimed at reducing costs and pursuing strategic growth. The interest on these notes will be paid out twice a year every 6 months. And the final payment, the principal amount, will be due in December of 2030. By issuing these notes, Illumina is essentially locking in a cost of capital for the next 5 years, giving them financial predictability as they execute their expansion plans. Now, like any debt instrument, there are always terms and conditions. If certain events of default happen, as defined in the agreement, the entire amount of these notes could become immediately due and payable. This is a standard protection for lenders. Also, Illumina has the option to redeem these notes early, either in whole or in part, under specific conditions outlined in the notes themselves. The details of this whole arrangement are laid out in a formal document called an indenture. This is essentially the contract between Illumina and the trustee representing the note holders. It is a critical document that governs the terms of the debt. And of course, for big financial maneuvers like this, you need legal heavyweights. The opinion of Cravath, Swain and Moore LLP lends further legitimacy to the issuing of these notes. Their involvement signals that all legal and regulatory ducks are in a row. Now, putting on my analyst hat, Illumina is making some very calculated moves here. They are tidying up their balance sheet by paying off more expensive debt and simultaneously funding growth through acquisition. This indicates a strong management team that is focused on both financial health and strategic expansion. The acquisition of SomaLogic, if it integrates well, could significantly bolster Illumina's offerings in the rapidly evolving field of genomics and proteomics. The risks certainly lie in the successful integration of SomaLogic and the potential market shifts in the biotech sector. However, the proactive refinancing of debt and the strategic investment in growth suggest a company that is not just reacting to the market but actively shaping its future. In conclusion, Illumina's issuance of these new notes is a clear sign of confidence and a well-executed financial strategy. They're not just borrowing money, they're investing in their future growth and solidifying their market position. Alright, that is our breakdown of Illumina's latest financial maneuver. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description for more discussions and insights. Thanks for watching. See you next time.